Okay, so let's talk about stop losses. First things first, how to use a stop loss. I'm going to separate this video off because Danny keeps reminding me that there's been significant problems with people using stop losses. I'm not sure. I thought he was saying like how to place a stop, but what he's saying is how to use a stop. Like what's the purpose of it? So let's just go through an example. So I'm gonna pull up a different stock. Well, actually, it doesn't matter. Let's do Tesla. All right, let's say we want to do 10 shares of Tesla. Okay, I'm just gonna buy Tesla at market. Okay, so now it says here I'm long 10 shares of Tesla, and the well, that's the market, right? So anyway, this is so we just did a market order here. If you can't see the screen, one second. Hmm. Okay, there we go. All right, so there's all right. So we shorted Tesla. I'm sorry, we bought Tesla, 10 shares of Tesla. Um, Now, as far as this goes, I have a trailing stop, and let's just look at this really quickly. So this right here is showing me. This is showing me the position on the chart, and anything in green, which is above. Basically, if the price of the stock is up here in the green, that means I'm making money. If it's in red, down below this, I'm losing money. That's the settings that I have on the chart. Now, I currently have a trailing stop. So the trailing stop will not appear visibly on the chart. Doesn't show up at all. So if I want to know if I have that, I can go to my trading monitor. And this is showing me currently I have this order filled. It was a buy market for Tesla, right? And then up here, it's telling me that I have a trailing stop that currently is at 239.68. This is an automatically added trailing stop that I have on here. I'm just going to cancel this. All right. Now, since I have bought Tesla, I have to have what type of stop loss to get out of the trade? Since I bought Tesla, what type of stop loss do I need to get out of the trade? Sell stop, correct. I need a sell stop to get out of the trade if I want to use a stop loss. So, if I want to use a stop loss, here's what I'll do. I'm going to go over here to the order entry, and what I'm going to do first is I have to enter a price, but first I want to do this. Now, S stop just means server side stop. It's not sell stop. It just means server side stop. So S stop is right there. The platform allows you to choose which order types you want to be able to view or not. This is going to be one of the default ones you'll see, but that is a regular stop loss. It doesn't mean that it's going to sell to stop. It just means it's a stop. Now, if I'm going to enter this stop, I have to tell it whether this is going to be a sell or a buy. Stop losses can be either to sell or to buy. So S stop does not mean selling stop. It's actually server stop. It means that the stop loss is not publicly viewable. It's only seen on the server side, which means that it's actually something that matters only if you're trading a real account. For right now, this here just means you have a stop. Okay, that selection just means it's a stop. STP also is the same thing, just it has a different place that it's being housed. Anyway, that part's not really important. So all we need to know is this is what we have to select, right? I'm long the stock, so I have to choose to get out, and I have to give it a price. Now, to give it the price, first things first, I need to figure out where did I get in at. Now, I have a couple ways I could do that. I'm just going to go to position summary. Okay, that's the pie chart looking thing. Trading monitor is the pulse looking button there. Okay, so now I see that I have a Tesla position where my average position price is 244.68. That's where I'm in at. So if I want to put a stop loss that's exactly $1 below that price, what price would the stop loss be at? If I want my stop loss to be $1 below that price, of course, it's a sell stop. What's the price, guys, that needs to be at? 243.68, correct. So I'm going to enter a stop loss to be $1 below this. I need to put it at 243.68. Then I hit this, sell. Right? Notice that NASDAQ is already selected, so I don't have to worry about that. If that weren't selected, I need to make sure it is, but it should automatically be there. Now I hit sell. Notice now I have a stop loss right there, TR7334AC1. That's my account number. STP stop loss is at 243.68, and it's for 10 shares because that's the number of shares I had here. That's the number of shares it's saying there. Okay, so I just added a stop loss to get me out of a buy position in the event that the market goes the opposite direction. So again, this is going to exit me out of my trade if the market goes down to here. Now, if I want to adjust that, I could adjust it by right-clicking here to change the stop. I could do that. Or I can drag it. If I click here, left-click on the mouse, notice that these dots appear. And I could do like this, drag it up, drag it up, drag it up. Let's say I want to put it right there. Notice it shows the price above my cursor. So 244.03, 02, 01, 244. If I let go of my mouse, then it's going to move it up to 244, which is where it is now. Okay. If I want to move it further away, I do the same thing. Hold down the left click on my mouse, move it down. Let's say the 243.90. Let it go. Now it's at 243.90. Okay. If I want to adjust it an easier way, in case I don't want to do it that way, I can literally go here, right click, change. There it is. And I could change this to whatever price that I want. So let's say I want it at 95. I'm going to get rid of this auto T-stop thing because I don't want it to trail. If I have that selected, it's going to become a trailing stop. I don't want it to be a trailing stop. I just want this to sell 10 shares at 243.95. The time in force is day because we can't do good till canceled orders. I hit send and notice that it just moved up to 243.95. Okay? Now, let me just move this further up so we get stopped out. So bear with me 1 second. I'm just going to move it right to there. Hopefully we get stopped out. Okay, we just got stopped out. Okay? All right. So I just got stopped out. I moved it up to where it was pretty. Yes, of course you can, but let's just move on. You can choose what size stop you want, Ricardo. That's a given. You can choose the size of it. But All I'm showing you here is how to use a stop. Okay, so if I decide that I want to sell 5 shares instead of 10, I could have done that. This is a regular stop where you're selling the entire position. If you want to do something smaller, you have to have more than one of them. If you put one stop in to sell half, you would have to have another stop in to sell the other half. So you'll have to have 2 stops if you're trying to sell part of your position at a time. If you only have 1 stop, it's only going to fill 1 time, right? Now, moving on, let's suppose that I want to short sell Tesla. Okay, so let's do the opposite. We went long the first time, let's go short. So what I'm going to do, now remember on my platform, I have it set to automatically add a trailing stop. So that's something that I've already preset the platform to do. So first thing is I got to choose the quantity of shares. I'm going to, again, do 10 shares. I'm going to just sell at market, MKT. It's a day order, so in NASDAQ, that's it. I hit sell. There it is. Now I'm short. Now, fortunately, the market's going down, so we're actually doing okay so far. But whatever the case may be, let's say we don't want to let the market go further than, let me move this aside so we can see it easier. Let's say we don't want to be in this position if the stock goes above about here where the VWAP is. Okay, that's where that line is. Okay, so that's about, according to the axis up here, that's about 244.50. Okay, so if I want to get out of this entire position with a stop loss, okay, I'm short the stock. Okay, notice I didn't hit this button. Don't use that button, SHRT. That's there, but you guys only have to hit sell or buy. Don't use that one. Just hit sell if you want to short sell to get in. Buy, of course, if you want to buy. All right, so we're now short. It says here I have in parentheses 10 in red, which means I am short, and it's at 243.95 that I am short. I still have that trailing stop. I want to cancel it first. Okay, now I've canceled my trailing stop. I have no stop loss. I have an unrealized profit of $1. So if I want to get out of a short position, how do I get out? How do you exit a short position? Yes, it probably is. Don't use that button, just use sell. Okay, good. So everyone, please note, because a number of you have asked this question, you got short, now how do I get out? To get out of a short position, you have to buy. Okay, make sure you write that down, because this is one question that every time I see it, that means that someone didn't watch the lesson. Okay, there's the entire video in the training section, the training videos, the educational videos on the Funder dashboard that goes over short versus long. So if you ask that question in here, how do I get out of a short trade? It obviously means you didn't watch the video, which obviously means you didn't do your homework, which obviously means you shouldn't be here till you actually watch that video, right? Okay, so if you're here, it should mean that you've done that stuff. You've actually done what you're supposed to do so that when you're here, we can make the best use of our time. So to get out of a short, you have to buy your way out. That's the only way to get out. So that means that if I'm going to enter a stop loss for a short position, will the stop loss be above the current market price or below? Where would the stop loss be? Above where the market is now or below? That's correct. It has to be above. And again, the reason it has to be above is because if I put the stop loss below where the market is right now, and it's a buy stop, it's going to exit right away. Okay? So it has to be above the current market price, my friends. If I put the buy stop in below the market, all it's going to happen is going to exit me out of the trade right away. But let's prove it. I'm going to put a 5 share buy stop, and I'm going to put it at 242.80, which is currently below. Okay, oh, hopefully it's still below. Let's put it at 242.70. Okay, so I'm gonna put that in as a buy stop, right? If I hit buy, I'm sorry, I didn't choose stop. There we go. If I hit buy, 5 shares, 242.70, which is below where we're at now, notice that instantly I got filled for 5 shares because I put the stop loss below where the market is now. Now, we've noticed a lot of people are doing this because apparently you're not sure how to use stops. That you're actually placing the buy stop below the market and you're getting stopped out right away. Now, the only way to not get stopped out right away is you have to put the stop loss above, as most of you understand. So that means that since the market's down here right now, I need to put the stop loss above where it is. So let's say I put it at 243.40. So first I got to enter the price, 243.40, which will be right where the cursor is there. I have to choose stop, and then I have to choose the size, which in this case is 5 shares. I hit buy, and now I have a stop that has been entered right here, sorry, at 243.40 for 5 shares. That is a stop loss, which means that if the market moves up and hits that price, I'm going to be bought out of my short because I sold already. So I have to buy to get out. Whatever you did to get in is what you do to get out, or the opposite is what you do to get out. So if you buy to get in, then you have to sell to get out. If you sell to get in, then you have to buy to get out. So on a note card, make sure you write that down somewhere, that to get out of a trade, you do the opposite of what you did to get in. So if you bought to get in, you sell to get out. If you sold short to get in, then you buy to get out. Okay? Now, this stop loss will not trail because I have not told it to do anything like that. All I did was entered a static stop that's going to sit there for all eternity, or at least for the rest of the day, until it gets hit. So in order for me to get hit, the market actually has to come back up. So I'm going to drag this down right to here, and let's see if Tesla goes up. Nope, so far it hasn't. All right, let's drag it down some more. Still going down. Let's drag it down some more. Isn't it funny when you're trying to get stopped out, it's hard? Oh, there we go. We just got stopped out. Okay, so I drag the stop loss down. Now I have automatic trailing stops that get added every time anything happens. So on my platform, if you have automatic trailing stops, make sure you look here because it's going to automatically drop a new trailing stop in. I just have to cancel it. Okay, unfortunately, there's no way around that. We've actually asked the programmers if they could fix that, but they basically said they can't. So in short, whenever you get executed on a trade, if you have automatic trailing stops at it, they get added right away. So the main purpose of this video is just to show you the logic of how to use stops. Okay, if I place a buy stop that's below the market and I'm already in a position, it's going to buy me out right away if I'm short. If I am long, in other words, I bought the market, the stock's going up, and I put a sell stop that's above where the market is now, it's going to automatically fill and take me out of my trade, or at least take me out of whatever amount of shares I set. So when you're using a stop loss, it has to be behind the direction that you want the market to go. If you want the market to go up, the stop loss has to be below where the market is now. If you want to get out of a short because you short sold the stock, then the stop loss has to be above where the market is now. Okay, that's how you use stops. Now for trailing stops, I already have them added in my settings. There's a video that I've already recorded that explains how to use trailing stops, so I'm not going to go over what it already covered in this video. But let's suppose that we got into a trade and I just go buy another 10 shares of Tesla. Okay, so I just bought 10 shares. Maybe I think it's going to go back up. Okay, So if I think it's going to go back up, so far it is, what would I want to do with my trailing stop? So my trailing stop currently, let me show you the settings. It says it's at 237.82. Now 237.82 is quite a distance away because that's exactly $5 below the entry price. Okay, since I bought, I need a sell stop. That's what was added. And since my settings have the stops added exactly $5 behind the market, then that puts me at 237.82, which is what this is displaying right up there. Now, when I want to change this, all I have to do is go to change. I right click on here, go to change, and now it gives me my settings for the trailing stop. Now notice this button here is grayed out because I already know this is a trailing stop, so I don't have anything to adjust down there. Here's what I have to adjust, right there. Okay? Now, if I want to adjust this stop loss, I have the trail amount set at 5 and the trail increment set at 5. So what does that mean? The amount is how far away the stop loss is behind where the market is now, or where the position started actually. So when the position starts, this number here is telling me the distance that the stop loss will start behind where I get in. So it's going to be $5 behind where I got in. Now, this here is saying how much the stock has to move from where I started before the stop loss is adjusted, and the stop loss will be adjusted by the same amount. So this is basically saying here that if the stock goes $5 in my favor, this stop loss will be adjusted upwards by $5, since this is currently a buy stop or sell stop. And if the stock goes up $10, then I would have two adjustments. One for the first $5 of movement, second for the second $5 of movement. Each time it's going to move up by 5. So $5 is a pretty big distance. Tesla's probably not going to go $5 against me in a single trade unless I happen to got in at the beginning of the day and I just sat on the trade and it went the wrong way all day. Most likely I'll never get hit on that $5 stop in an intraday trade. Most likely, at least. It's possible, but it's not likely. So that means that the stop loss is too far away. So what if I did this? What if I made it 1 and I left this increment at $5? What's going to happen? Well, let's find out. The first thing that's going to happen is the stop loss is going to be moved to $1, in this case below our entry point. So it's going to be moved to 241.82. And there it is, 241.82. But I left the increment at $5. So what that means is that the stop loss is going to stay at 241.82 until the market goes to $5 above my entry price at 242.82. So when we hit 247.82, only then will the stop loss be adjusted. And how is it going to be adjusted? It's going to be moved up exactly $5 from where it started. So if it starts at 241.82, it's going to be moved up to 246.82, which will be exactly $1 behind what the price of the stock will be at that time. In other words, the increment just says how far the stop loss will be moved once the stock moves that amount. So once the stock moves $5, the stop loss will be moved up by $5. Simple as that. The amount is how far behind the stock that you start. So now as you understand how that works, you just have to make sure you're on the right side of the market. Obviously, the trailing stop, if you have it set to automatically be added, it's always going to be on the right side of the market. It'll never be on the wrong side. It's only when you place your own stops that are not automatically added where it's even possible for you to put the stop loss in the wrong place. Now, it's also critical to understand that stop loss is a specific designation. If I put in 242.00, right, and I hit the sell button, what's going to happen here? What's going to happen if I do that, guys? I enter 242.00. If I hit sell, what's going to happen here? Take a guess. What will happen now that I have? Nope. It will not. I currently have an open position in Tesla. I'm long 10 shares. So if I hit this button, what's going to happen? I already have an open position. So I can't short sell because I already have a position. Nope. Watch what happens. Just watch. Yes, thank you, Douglas. It will close. Thank you. I have 10 shares listed here. I put a price in. It's a day order. It's going to the NASDAQ. The moment I hit sell, I will be stopped out of position correctly. Correct, Ricky. Why? Because I'm asking to sell at 242, but the market currently is at 242.27. So instantly I'm going to be exited because the current price that's available is better than the price that I'm asking for. Now, this is exactly where we know for certain a lot of people are making a mistake. You're actually thinking you're entering a stop loss when you're not entering a stop loss at all. You're actually entering a limit order. The only way you can enter a stop is you have to select that. If that is not visible here, whatever you're doing is not a stop. You have to see that actual selection there, either STP or S-STP. If it says day, extended, fill or kill, if it says anything else, that's a limit order. And since you already had a position of 10 shares that was already here at the time, all the market sees is you're trying to sell at a price that's below where you are now. So if you're trying to sell at a price that's below where you are now, then that's going to be an exit because you put a limit order in to sell, but it's lower than where you bought. So therefore, you're basically going to get X'd out of the trade right away. If the entry was above, in other words, if I put a limit order that's above the current market price, then it would sit there until it gets filled. Okay? So in other words, even if I'm in a position, let's buy another position just to show you what I mean. I bought another position in Tesla, right? So now we're long again, right down here. Okay? Just got back in. Now, hopefully the market goes down because I want you to see, I want to put a limit order below the entry point. Okay, here we go. So our entry point is 242.15, right? So I'm going to put a exit at too late. Bell just rang. 242.14. So if I had a limit order at 242.14 and I hit sell, I'm going to get rejected here because I can't. But I'm outside the trading period. But the point is, if I put the limit order, even if it's below where I originally got in, as long as it's above the current market price, still fine. Okay? So in other words, you could be in a losing position, you're down, and then you put a limit order to exit that's above the current market price. If you did that, your limit order is valid because you have a position, you're currently down. All that's going to happen is if the market comes back up to that price, even though it's below your entry, even though it's going to lose you money, you'll still get exited out of the trade because that's a valid exit. It's something that any software would understand. All you're trying to do is you want to get out of your trade, but currently the market is below your entry, but you still want to get out if it comes back a little bit. Okay? So limit orders are conditional. You're waiting for something to get to a price that you desire, then you get out. Okay. Yeah, this won't let me get out. So I'll be stuck in this overnight. Oh well. But if correct, Timothy, if I have a $5 trailing stop on 100 shares, I have to lose $500 in order to get out, to be exited out of the stop loss. That's correct. So the reason why I have it set at $5, right? The reason I have it set that way is simple, because when I enter the trade, there are different stocks that could be there. One could be a stock that could easily move $5. The other could be a stock that doesn't. So if I'm putting on the trade, I have to think about the fact that if I have an automatic trailing stop being added, which is a good idea because it guarantees that you'll always have a stop loss that's placed in the correct direction and it will be in the right size. If I do the stop loss any other way, it's up to me to make sure it's correct. But if I have the automatic trailing stop added, then whatever stop is added, it's guaranteed to be correct, at least in terms of which direction it's going at how many shares. So adding an automatic trailing stop has the advantage. And again, there's a video that explains that on the Funder YouTube channel. So if you're not sure about that one, just go there and you'll see the video. I'll link you to it right now, just in case anyone's not clear about where that video is. This is it. I'll put it in the announcements. Let's put video on how to use trailing stops. This is being recorded, that's correct. So, what we've summarized so far is that if you go here to your order entry system, the only way to get the correct stop loss first is you have to choose stop, then you have to put a price. If you leave it at MKT, it actually is going to enter your stop loss at exactly what the current price is on the trade, which will of course get you stopped out instantly. So you're going to have to choose a price that is away from, in the opposite direction of where you want the market to go. So if you bought the market, if you are a buyer, then you want to enter a sell stop that is below where you got in. If you are a short seller, you want to enter a buy stop that is above where you got in. Okay? Now, if I enter a sell stop or a buy stop and I don't currently have a position, it still works. In other words, if I enter a sell stop and I don't currently have a position, I would have to put the sell stop, of course, below where the market is now. But if I don't currently have an open position, all that's going to happen is as soon as that sell stop price gets hit, the order gets executed and it will sell at market price, whatever the market price is at that moment, and that will cause me to enter into a short position, which means that if you wanted to get into a short at a price that's lower than where the market is now, but you don't want to wait around, you can put in a sell stop and it will actually trigger an entry once it gets hit. So you'll get short if the market goes down. Likewise, if I enter a buy stop above the market, but I don't currently have a position in the market, then when the buy stop price is reached, I will buy the market and I'll be in a long position by whatever number of shares I chose at roughly the same price as the stop loss. It may not be exactly the price chosen for the stop loss because the stop loss does not guarantee the price. It only guarantees that you'll get in at whatever price is available at that moment. Okay? So that means that if you put your stop loss at a particular price point and you notice that you don't get out at that particular price, it may not be because the stop loss did anything wrong. It just means that at that moment, the market price was not equal to the stop loss value that you chose. In other words, if the market gaps down, in other words, it doesn't even trade the stop price, it actually starts trading below your sell stop, you are going to get stopped out, and you're going to get stopped out whatever the market price was at that moment, even though it's below where you were expecting to get out. Now, some of you have mentioned to us, I can't understand this. I put a stop loss at a particular price. I see the market traded through that price. I see the price bar went through that price, but I got stopped out at a price that's significantly lower than what I expected. What happened? Well, most likely what happened is the price didn't actually trade where your stop loss is. The market literally traded past that point. It never traded through that point. This is another important thing to understand about the market. Not every stock is very liquid, which means it is very common, not it happens every now and then. It is very common to have a stop loss price actually skipped by the market itself. The stock literally does not trade the price at all. It trades some price that's lower than your sell stop or higher than your buy stop without actually trading that price. When that happens, we call that slippage. Slippage is real. It's one of the things that you have to sign on your waiver every time you open a brokerage account, that you understand that when you use a stop loss, you are not guaranteed to get out at the specific price you set. You're only guaranteed an execution at whatever the best available price is at that moment. Okay? So make sure you write that down as well, that your stop loss does not guarantee that you get out at the exact price that you entered. It only guarantees you will be exited once the price of the stock trades at or below your sell stop. You'll be selling at market. And if it trades at or above your buy stop price, you'll be buying at market at whatever price is currently available at that time. But when you're dealing with very liquid stocks like Apple or Microsoft, most likely you're going to get executed at exactly the price you chose. But if you're dealing with less liquid stocks, like maybe Baidu or Airbnb or Zion Bank, there's a good chance you will get filled at a price that's slightly less favorable than what you wanted. Okay. So I'm going to end the section here on stop losses so I can add this to our database in our YouTube channel. So I'm stopping this recording now.